All right, welcome back. I didn't do video yesterday because I was knackered, and to be honest, went to the gym earlier and I couldn't be bothered, which is one of the reasons why I haven't traded today. And also, we got FOMC today and a bunch of interest rate stuff coming on. So we're gonna get into yesterday's trade that I took, and it was a loser. I trimmed the stop, managed me risk, and yeah, pretty much. If I'd kept my initial stop, what I'm doing is I'm just getting my broker statement up. I'll tell you what is going on. So yeah, yesterday was £48.81 pence loss. It's 50 pips. I was in it for 3 hours and 8 minutes, and yeah, so pretty much made Monday's trade break even. Lost like what, two quid this week. Um, So yeah, not ideal, but it's part of the game. So I'm gonna get into it. It might be a bit of a shorter video just because obviously today has happened and it just makes going back on the charts every time you change the time frame that much more difficult. But just looking at this straight away, we can see we got relative equal highs now sitting by this higher time frame point of interest. So with this FOMC, depending on how it goes, we could see price shoot up, and that would be pretty lovely, to be honest. So what we're going to look at is my reasoning for getting into the trade yesterday. So let's reset chart view, and yesterday's trade was here. So this is Friday. What are we on? 15-minute Monday. No, it's not. Yesterday's trade is here. Right. So pretty much for my video on Monday, I mentioned this low being swept was something I was looking out for. This was around previous daily low at the time, and this was previous daily high up here. And this was just, what is this, 30-minute? It's targeting this fair value gap as like the take profit once I trimmed the entry. And yeah, so we had an SMT. This on the S&P didn't sweep, whereas on the Nasdaq it did after trading into this fair value gap. Unfortunately, price has just come back and just tested it multiple times and has swept it today during the AM session ahead of FOMC. Just looking at today's stuff quickly. I've barely been on the charts, to be honest, so I'm not going to slouch on my chair. So let's just dial in a sec here. So what was my entry criteria? So if we look at the 30, it was a 1 hour, was it? Yeah, I mean, to be honest, looking at this, my setup wasn't there properly. I seen a post, it's like, stop trading what looks close enough to be your setup and only trade your setup. And it wasn't my setup. I like at the time I was like, oh yeah, I mean it's close enough, and yeah, I was just wrong. So um, in my head, I had this as the well, not in my head. I was using this as the 1 hour inverse fair value gap, break a structure here, and then we had a fair value gap form on the 15-minute, which isn't really a clear fair value gap. If we took this inverse here as well from previous day, I was looking at that too. So yeah, I ended off the retracement here. I think it was more on a 5-minute entry. Yeah, so I entered off like this here, like the push up. This is like the spread difference, so it would have been something like that, but ended up being this. And yeah, this is at what, 4:30 New York time, so just coming towards the end of the London session. And yeah, pretty much we were in drawdown for a bit. My stop was below. Well, I gave myself a bit more room for the stop, but it was below this inverse. So normally I would put the stop like where my line is now here, I just dragged it down a little bit for room. As you can see, if I had stayed in this trade, I would have been taken out by literally, I think it was like 4 ticks or something. Like, you see how close that is down there. That would have been frustrating. So I'm pretty glad that I trimmed my risk. I also had, what did I have? I had a lunch at work. That was it. I had a team lunch. So that was another reason for trimming the risk. So in terms of the initial entry and the targets, we're looking at 1.88. I think it was 13 lots. Yeah, so it looks something like that. And then from there, pretty much, we're looking at 304 for profit. And yeah, basically, once we got this moved down, I was still thinking, like, looking at the higher time frame, it's a little bear. Well, it's quite bearish here. I was aiming for these like equal highs, relative equal highs as well, being the previous daily high. But in hindsight, we got this on the hourly chart, break a structure here, 1 hour fair value gap that we traded into multiple times, and price continued down lower to take these relative equal lows instead. So yeah, in hindsight, trade the trend, mate. Do you know what I mean? Nonetheless, I still had reason for getting in. So in terms of my actual trade, we got lucky here that price didn't stop me out straight away. Not straight away, but like an hour into the trade. Came back to break even. And, I was looking at this quite diligently just to think, right, if I can take risk off, then I am going to, because I didn't like the trend. Obviously, once you're sitting in the consolidation between the sessions, as you can see here, it's very chop, 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 chop compared to, oh, lovely car alarm going off, compared to the AM session, not ideal. So the timing was also a bit not great. Overall, it was just like a bit of a bad trade. I got stopped out during my lunch, and I was just like, yeah, I was completely fine with being stopped out. I kind of seen it coming after the time that I was in it, and the fact that price didn't get the right reaction off this. I was expecting it to come down a little bit here and then push up, but we got this mad drop right in the end of the London session, or like you see here, it just dropped like what, 6854 to 6837. So it dropped like 20 handles on the S&P like in 5 minutes. So and then recovered. So I was sort of sitting there like, what the fuck has just caused that candle? Like, and then yeah, so from here, if we go into the 1 minute, I had to really drop down into this. There's a few areas that I was looking at, and I'll tell you why. So firstly, we had this volume imbalance where the two wicks meet and the bodies of the candles don't meet. I was looking to see the reaction off that, and I was thinking, we could see price push down off this, and believe it or not, we did see that happen. We also had this volume imbalance here that I was potentially looking at to see, well, if price does continue upwards, that could possibly be another exit there. But yeah, price just didn't break above this until the AM session. So I think it was once we reached this and I saw the reaction, I trimmed the stop loss below this order block here. Didn't think it would need to come down here, but there was a part of me that was thinking that at the time. So with that being said, I think that ended up looking a bit more like this. If we trim that to just under there, and then by that time I'd moved my TP down to here, so it was still like a 3.4 to 1, or 1.5 to 1 if I was to get out there. And just talking about that in hindsight is just like, if I need to adjust my position, then I haven't set it up properly. Do you know what I mean? I need to accept the losses if that is the case, and I need to manage better and enter better like I would be if I was executing my strategy properly. But yeah, again, it's just like it's impulse, and like I say, thinking your setup's kind of there when it really isn't. I took this as like a sign to be like, yeah, fine, that's the inverse, but it just wasn't. Do you know what I mean? Um, on the Nasdaq, I still had this higher time frame point of interest in mind, so that was another reason why I was bullish. But maybe the timing's just wrong. Well, as you can see, so we've now swept these equal lows and then sort of started trading up. But yeah, I've been out of the market today. There's too much red folder going on. Trump also tweeted, my favorite word is tariff, and caused this candle here. So, was it that one? Well, pretty much the market sold off once that tweeted. So it's just one of those. We lost £48, so it's not a big deal, and we're still up on the week, so pretty much break even on the week. So the risk was managed right. At least that's a positive. And yeah, I mean, once I saw this, and I've been stopped out here, I was like, oh, thank God. Well, not thank God, but like, well, yeah, thank God for everything. Do you know what I mean? But yeah, that would have been very frustrating to get stopped out right there and then price run above these equal highs. So I think I had multiple reasons to why I wanted to get into this trade. Target that this up here. I'm not pointing at the screen, but you can obviously see what I'm pointing at. The equal highs here, the equal highs here. There was enough confluences to get in long, but my actual entry criteria was not strong enough. It just wasn't strong enough. So we've seen that. And yeah, so we take that. I also made a note because I didn't journal this trade yesterday, that I wasn't going to trade today, especially with all the red folder. So here we are, journaling it. My mind's a bit all over the place. I've been super busy at work in the last couple of weeks, so it's not been ideal. And in general, I haven't had as much time to look at the charts, and the price action hasn't been what I want it to be. So we're just taking it slow this month, I think. We're just going to chill out a bit. Obviously, we'll continue to look, but yeah, it's one of those. We've got FOMC in 1 hour and 20 minutes. So we'll probably see a big candle. And if it is the case that price then moves up to this higher time frame point of interest, we can look for a short off that for a previous daily low. So yeah, like I say, we got these draws here. Swept these lows. Possible that we come down and take this one or these ones over here. So it's just like, if we look at the daily chart in general, like you can see this, it's just very, very choppy. Lots of consolidation in the last few days, not big clean candles like this. So yeah, I think you can even tell by the way I'm like speaking in this video, it's sort of a bit flustered. Same way price has been, it's like all reflecting, and I'm seeing it as I'm speaking it now. So it's just like, it's good to reflect and journal this. And yeah, ultimately we're just going to step back a little bit and just wait for a better setup, because it makes sense to do so. I think what I will do, if this model doesn't play out, like I know it can, I've done the back testing on it. I either need to do one of two things. I need to go and back test more, collect more data, and really delve deep into the times where it works and the times where it doesn't work, so I can identify more confluences to confirm my conviction in the model and my entry criteria, targets, etc. Because, I've been trading this model for a few months now, and it's not quite there. It's not quite there. There is holes in it, and kind of just like holding intraday is a bit difficult for me, I'm finding, on a live account compared to a demo account. And yeah, sometimes, you get lucky, you get a nice trade, but ultimately it needs to be that my risk management is doing the heavy lifting, and when I lose trades, I'm not losing much. Um, the fact that I'm adjusting my trades, it's showing a lack of conviction and a lack of trust in my analysis, and it's clear to see when I'm discussing it in these videos. It's also easy to get bummed out in the losses, and yeah, like I say, it's like this is a very transparent discussion that I'm having is for myself, um, but also so I just have it on record, and I'm just putting in the hours, putting in time to do it. Sometimes it's a bit of waffle, sometimes it's good fun, but yeah, if it is the case where I pick up more confluences to identify when taking trades, when entering trades, when exiting trades, my targets, etc. We can continue working on this, but I am also considering going back to just trading like one session at one time, because I think that is, just from like general thought, that seems to be where the inconsistency is. It's the timings that I'm taking trades, tends to be either towards the end of London session, sitting in consolidation, and then something happens in the AM session, or towards the end of the AM session, price then begins to run across the lunchtime. So yeah, there's quite a few things to take away, a few things to look at, a few things to learn, and yeah, I'll just go over the news quickly. So you can see here, lots of red folder today. I've got FOMC statement, budget balance, press conference soon. Expected to feature a rate cut and a lot more. So what we'll be looking at there, it all depends. Tomorrow, unemployment as usual. On a Thursday and Friday, nothing too major. But yeah, at the end of the day, overall summary is just take it slow. It's not a sprint. It's a difficult skill to learn, difficult skill to maintain, and there's always improvement to make. So even just by making this video now and discussing it and just chatting it through with myself, my psychology and whatnot, that's still law of accumulation. You put in the time, you put in the minutes, it'll eventually come over time. So I think this video is probably getting a bit long at the moment, and yeah, is there anything else that I need to talk about? So yeah, we had that. Yeah, I think it's just the general place of the market at the moment. Like, it's very very much consolidating rather than these big strong moves here. And yeah, ultimately we'll just come back to it. We'll come back to it and have a fresh look tomorrow, see what's going on. And yeah, with that being said, I'll catch you in a bit.